Hello and welcome. Today's date, Friday, 27th of March, 2020. All bets, trades of the like, that's within each's own risk and their own reward. On the single hour term for Bitcoin, we've got just magnificent support, pretty much around really the 65 handle. We can see the low end here is pretty much 65 or 60, yeah, 64. Then up to 6,600. It was pretty much right around here. I mean, that has just been fantastic support. Resistance, I mean, you can almost draw it like this. I mean, then down to here, and we come down here's resistance, and there really hasn't been any substantially amazing place. But I guess the upper end, especially when we consider this high in here, 7,000, 6,900 here, so yeah, 69 up to 71. And then short term, if it's able to do anything like holding and staying in this type of area around 67.50 as a low for more than a few hours, I mean, it's still got to get up there. But if it can get above this and hold this, something like that would be a good setup, something like that. But the volatility, magnificent, tiny during extreme volatile global market volatile times. We can see here on the daily chart just holding with the 18 average of highs. And I'm not going to say that showing strength with the 18 highs because I only say that if it's in a bullish situation and this is in a downward going sideways. So if I would see weakness at the 18 lows, I would say that because it's in a downtrend. However, as I did mention here, holding and staying above these areas for a significant period of time would start to show that this would be live for getting ready to get going. On a bearish level, if we come down here, this would meet up. This resistance here would meet up with the 18 lows. It would be a decent sized leg from this point in here. So therefore, right now, that would be about 5,800 is what I can see there. So when I go, say let's put this on this, if it breaks down below this range, 58 is a match of this previous low. And when you look at where you would go, one, you're talking about making a higher low to this point. We pretty much got a trend line like that. That would be an obvious break. So it's all about making that higher low. So in a very small move, and if it can make a higher low to this one, that's fantastic. And of course, matching low is exactly where we point into there. And if it comes down here, this would be around the must-hold area. Pretty much a 61.8% move, even maybe a little bit lower. 61.8% of a move from the key low to where your high is, and I guess you could say in here, is for this move to not fail. It has to hold 61.8%. If you see it weakness with amongst around this area, then there's a lot of bad negative alerts that this thing would not only come down and retest this low, but a good chance of making a new lower low after that. So as it plays out, it's still, again, a lot of this is the sideways consolidation. 3,000 low here, 20,000 high, and as long as it's in that sideways move, sideways range, and that's a pretty decent size volatile range considering it's more than half off to get to the lowest end. And you're at the stage of AAA to get to the upper end. So it is as it is. And let's move on to other markets outside of cryptocurrencies. And we'll start off within the Dow, which is at 21,967 as of 2:16 p.m. Eastern Time. So it's a little under 2 hours of market trading left in the day. On the weekly chart, the week is going to be an up week here. We had a gain of 14%, and these large up weeks happen when you're at these major levels. So 1, 2, 3, 4, 5 weeks have been completed of extreme volatility. No signs yet, I don't see, volatility slowing down. I don't want to do 3 day. On the daily chart today, maybe a little bit in today's intraday session, as we can see it didn't trade too much, but we'll take a look at this even more short term in here. As far as the daily is concerned, from this move in here, correctionary plays. This one got up to the 18 lows and then a sudden decline. And this one, not even close. I mean, this one, it's such a huge move that even a decent green candle didn't even come close to the 18 lows. And then just continuous down action, then a monster move we've seen here, not resisting the lows. And now, really, we're not even resisting the highs. We're almost supporting it. What I'll do, I haven't done this yet, so I don't know exactly what it's going to look like, is put this at this general area because it coincides with this level of resistance on May the 25th, and see how this level is reacting as I now move into this shorter term time frame. And let's move this to the hourly chart. You can see with all the gap levels and everything amongst it. So as So where this gap opened on March the 12th, it has been basically consolidating within this level all day long. As far as the 18 average of lows, that's where it's been spending the entire day today, is supporting that level. 15-minute chart. Now the market gaps lower. So therefore, throughout the little bit of the trading period, we got a low of 21.4 change, so 21 and a half, up to 22.08. So that's like 58. That's 2.7% maybe. So a little slowing within it. As it plays out, we've had this phenomenal move. And normally in this, when there's going to be a bottom, we should be slowly getting the recovery back in that of making higher highs and higher lows at a lower volatile rate than the decline. And right now that's not the case. So until I see real evidence of lower volatility going down, and given the fact that it is only 2.7%, when you look at the futures, what you're not seeing in here is the movements that happen. Well, look what happened in the day on Thursday. It comes up and having an amazing 15-minute period of a breakout, and yet, so during the invisible times of the market being closed, which was closed up some people apparently, the price action went from this level and went all the way down to here. So a bunch of different stuff happened. So from this day, you could say the volatility is from 225 down to like 215. That's 10 basis points. And therefore, now we're talking about like 5% again. That's what you've been getting, like 5% or more moves every single day. And on the weekly chart, we can see again, 4 or 5 consecutive weeks of these monster sort of moves in here. The size of these candles, most certainly, in comparison to the size of these ones, much, much larger. Now let's move us on to the cheaper gold price, I assume, because this is 1617.04. If I go like this and I look at this, I'll see it's only down to 1622. Didn't prepare myself for that. I'm curious to see what this looks like now. You can see it comes back down. Because the ratio on this, you can see this came back to the previous high. This is the futures, as it says on the top. But if I go to this, which is, I think that it says CFDs on gold, whatever it's called, future derivatives, I don't know, maybe. But it didn't go up to this level. It's just hanging in there, same price. But overall, huge move down, huge move up. That's just a monster recovery within these kinds of times. So we're back to the levels of the breakout here on February 21st. And on the monthly chart, we've just been having a phenomenal run since exitation of this 18 on May of 2019. As it has had this great little move. We've already found support within the 18 on this particular period with just this, again, large volatility that has been playing within the markets. And I find things interesting, like people... one person was mentioning, yep, gold's going to be $5,000 soon, and this is in 2019. How in the world could it be $25,000 anytime soon? And that's if we get to a serious level of moving into a stage of a serious fiat currency collapse. And on this level here, if I see the breakout stages, like continuation, green candle going higher on this, this is what I call a scary level of potential resistance, because this is a high we haven't seen in several periods, and in time frames this is 2011, so very close to a decade. And then if that's the case, if we're going back to 9-year highs and we've had a good run up, then maybe, that's the key word, maybe we resist. And if you resist there, maybe we just come down to like one of these two levels or just go sideways. And if there's not resistance here, and you see, okay, we're at 2155, 2260, 2300, there's a good chance those numbers would keep going forward like that relatively quick, within a day or two, or within one day. You're going to pretty much know right there that this thing is probably poised to be reaching 5, 6, 7, 8, 9 soon. And if not, into the 5 figures. So when I say soon, this year, June, July, August, November, December, or whatever, anytime, and in the next year, but soon as in And within 10, 12, 15 months, and possibly even 4, 5, 6. As we are looking at a monthly chart in here, and a move that could just be like one of those phenomenally outstanding ones. And then we go to the other coin, which has more data. So I go like this. This gives me 1980 as well. And there we are. And in a situation in here, and some of these longer term charts I remember were just fantastically bullish. This would be 6,000 in here. So if we're looking for where a key move is, okay, key low, key high, key low. At first these lows were in here, but that was only at first. And on the way we can have this, and what it didn't do is have a key low down here. No, key low right here. So key high, well, 5,000 would come up here. 7,000 in here, or 65. So if we're looking at boom, 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 and as I'm looking at this, what's going to be interesting of note would be this trend line. And I'm not going to draw it in too well. That's 27. It's probably just going to crush that number. I mean, to me, this would be something that's too small. I talk about for a move that's not too big, not too small, just right. And normally in markets, they're not too small. So if a break of resistance is going to happen and we're here, I mean, I got to think we're a long ways away still yet to where we're going, meaning this to me was the conservative area. I guess conservative is in the lower part, but 4,000 is conservative area. And then you start to, and then it becomes an amazing high if they can get up to 65 at anything north of such. Now switching course now, or moving over to silver, a couple days within the 18 highs, after a decent amount of days getting up to such within the daily chart. On the weekly chart, obviously breaking down from this major level of support at 16.5. And one decent sized week right now. This week's moving at 17.5%. And again, you're doing so amongst extreme volatility. On the monthly chart, we've been, it's got the chance to still hold the support level just because it went down here and it broke well below this key range area of around 13 high change, 14 bucks. But it didn't spend much time near that $14 barrier. I can draw a quick little line saying here, which has been great support. And then now when I go back and I take a look at this, say on a shorter term time frame, I can see that it dipped below. It had a good run, and when it had, and not only did it have a good run to go down, it had to have a good run to get back to it, but it resisted that previous key level, had a good correctionary move, and then when it came up to it, it showed a good sign of weak resistance where it stabilized and congested and really supported that area, and then bouncing for a great gain, and now bye-bye to that 14 area. Whether it will come back or not, maybe, but as of now, it is back above it, which means that on the monthly chart, it's still amongst the sideways correctionary range. The upper end of this resistance is between the low end is about 19 change after this last move, but really it's got to get above 21. As that was the level of this high, and in doing so, again here, the potential for these moves could be phenomenally large. And when I look at the fundamentals of the situation on the actual silver market, and it seems to me as if the places that sell you silver right now are in shorter supply, and I think they're going to have a very difficult time and getting their supply back compared to normal situations of high volume and high demand. As we have places that make silver, like the Canadian Mint, which is shut down due to the COVID situation going on right now. So there's people aren't working there anymore in a factory that would normally work 24/7. And then we're going to have these mines shutting down, not only for the silver and gold, but even we have the copper and base metals, which they produce a decent amount into the silver inventory, them not going through. If the silver is not available, then how fast this thing could escalate, and the situational possibility of what could happen this year. And I never ever thought within the next 12 months it was ever been possible until now, where we could be talking about getting much greater than 10 times return from where we stand today, or breaking past 152, 300 in this year. Is that even possible? Well, given the situations of the economy and how we have all of the hyperinflationary factors, the silver factors of hard to get the money, currency, hard to get the silver, the money, yes. I find it very, very fascinating, the potential that could be moving forward and the major demand that people would have for knowing, for getting into silver. And as we see, people can, in an instant, understand and know new things. I'm amazed to how fast humans can understand things like social distancing, flattening the curve, words like that. I'm going to switch this time frame to the 8, but as they are familiar with those type of words, today I could show a picture of a silver coin, a maple, an eagle, and what I can do is I can say this is a silver blank ION coin. And I can state on there that blank is a one syllable word for an animal. Of course, the answer would be BULL for bull. And how many would get that correct today? I would have to think. If I were to put a picture of a silver, I even put a picture of a silver eagle, because eagle, that's two syllables. That can confuse people too. But to put a picture of a silver eagle and state, yes, this is a silver blank ION coin. And then you can write whatever specifics that are whatever made by the United States Mint or made by the Canadian Mint if it's a maple, yada yada, stuff like that. And then give that to like high school students and more importantly, college university students. How many of them would get that answer correct? I don't think too many would. Yet, in a year from now, that might not be the case, as people are going to be learning about hyperinflation because they're going to be into it. They're going to be finding out about what a fiat currency is because they happen to talk to a random person. More and more people, especially when people are at home more, are going to have access to learning about this information from one source or another and be like, OMG, holy crap, this is not good. And they're just not, this is how currency's made. This is, wow, interest. And if you're familiar with it, Hidden Secrets of Money, that and Money is Debt. And that's old school, both of them. But all that information is relevant for today. It's been, for me, about 12 years, and I'm thinking, okay, for 12 years now, I knew this economy was going to be going through a dollar collapse moment. And it seems right now we are going through it. Anyway, next market. That is the US dollar index, which is measured against other fiat currencies, and every single one of them that they're measured against in the basket. And even the other ones not in the basket that are going on right now, pretty much is moments away, months, pretty much same thing, before going through stages of inflation in prices. Because really, how much is real inflation for your country in this month of March? Meaning, how much has a currency supply been raised since February 29 and midnight? Boom, March 1st now, 27 days ago. There's been a lot of bailouts. There's been a lot of currency injection, helicopter currency coming in. That 20, 30, 40, 50, 68, I even checked the numbers. This is getting high because the 2009 stimulus packages are really just becoming small compared to what's been really going on here. But this is the dollar index going well past lows, not seen in quite some time, back to, end of 2018. So a year and change. And then seeing highs even much earlier than that. Now it's back to the levels of resistance where it came from, moving in past a 38.2% correction. 61 would be about 97, 98. So you talk about, that would be a must hold. Well, this is an extreme move this thing could very easily have a failed breakout here and come down here. And this could find support and then retest some of these larger areas, which is like coming back and retesting this high in here. I don't really care personally because, again, this is one fiat currency, which is the US one, against all the other ones in the basket. Now TLT, which is treasury bonds, all part of the whole fiat mechanism system, and interest rates pretty much at zero, or practically exactly at that. And this going up and such, and the volatility, we can say all the way up to here, March 5th, and then all of a sudden, how do you do? All of these gaps are just, I mean, they're terrible. But you can see, sense here, the size of these moves are becoming wild, and now it's showing strength amongst the 18 average of highs. Like this thing is ready and poised for a huge, huge move higher. As far as the next chart now is crude oil. So $21.43 here, as it is hanging in there within this lowest area. This is, I've never really ever seen prices at this level before because, well, let's just see here. What do we got for the monthly chart? We're at levels going back to, well, I didn't follow markets really back in here, but we've broken past this low. Obviously, this one was taken out before as well. Is it possible that this thing comes down and tests these $11 levels from the end of the millennium? I don't know. And how about these 1984 lows of 10, which is pretty much in the same area, but it does seem as if that could be the case. And big downward volatility. Nothing here even close to showing positive strength moving forward, in the sense that all the other markets have had their nice little bottom rallies, that this one hasn't been doing so, and it's showing more of a bearish sentiment of a possible good plunge lower, because we have this down move here from this March 16th point that comes down to this low. We have this rally day come back down on March the 23rd, and then a piddly ass rally over 2 or 3 days to this high, and now the volatility decently compared to here, and now at the lower end, so you see that curve coming down, really a third test of this support level. So because the more often these levels are tested, the more likely it is it's taken out. That it looks to me as if this thing is ready to have this move lower. Now, whether short term it's able to make a move up to, say, like 22.5 or even 23, and I would have a hard time trusting the moves in here, as far as if it's able to get up there, that it's going to be able to get much higher. But there's been no positive momentum for crude oil whatsoever. And we'll finish this off within ratios. First one, the gold to silver, then we'll do gold and Bitcoin. And in this, gold has had a phenomenal breakout. This level of resistance that it occurred in the early part of the 1990s, most certainly breaking well north of that, and we can see how gold has been just really leading the way. That is it possible that silver is like 25 or 30 bucks an ounce and gold goes to like 5,000? As I was mentioning at the start of the video, like gold, it wouldn't be surprising me going the 4, 5, 6,000 area. That, what number will this get up to? 150, 160, 180? Because if this is, say, a gold 6,000, if the ratio is even 150, that means silver would be $40. And it wouldn't be a surprise to me if silver was around 50, 40, or even $30, 35, 34, and then the ratio does go higher from that point. I've stated for a long time on this channel where I think long term this is going. And short answer is not only a test of this previous low, but a significant break below in time. But whether we'll have any moves to go to 150, 180, whatever beforehand, I stated before, and I thought there was a decent chance we may have, and we're kind of seeing it not in the way that I showed. And I did show a way, not like this, of course, but similar. And on the daily chart for the ratio, I mean, there's just one of the fantastic moves it had from the late February time frame, nothing stopping it until March 18th. Since then, it's had this correctionary move back down the 18. And yeah, we'll see how it plays out from here, but it wouldn't be a surprise that if it does manage to do that. With that being said, as I pointed out, with the whole silver supply issue, maybe we've seen our tops. I'm not making any bets in any sort for this to go higher. And we could see silver prices having moves beyond belief because of the fact that of the fundamental levels that I just stated, and it can just overly perform gold, and when it is maybe $5,000 or $6,000 gold, maybe we do see $200 or $300 or $400 silver at that price. The possibilities are either way are realistic for me of the two that I just mentioned anyway. And finally, Bitcoin and gold, which is, I mean, this is taking one divide by the other. But I did mention here how Bitcoin has just been doing nothing for the last couple of days. And let's take a look at this on the hourly. This little tight little range here. So very similar to how it looks against the dollar, as I showed Bitcoin from before at the start of this. And I mean, big support here at this level. 3-month time frame, and I guess we'll do monthly time for this. Yeah, that looks better. It's the same sort of sideways range as I mentioned. Yeah, Bitcoin between 3 and 20,000. Well, with this is between 2.5, and we'll manage to get up to 15. Well, it's possible here that maybe Bitcoin does manage to do a good gain to get to this high, and it has to do well north of 20,000 to get there, because gold goes well north of 2,000, 3, 4, 5,000, as I've been mentioning as well. But this could be a chart that has a lot of meaning moving forward compared to, say, something like either one of these two versus the dollar. And we'll, right now, short term, I mean, this is one of those, I mean, something's got to give type of a look. I mean, this thing is like crunched like no other in this correctionary move. It's got to break out up or down, yada, yada. We'll see later what happens amongst this chart. But I'm going to end this video now. So I'd like to thank you for tuning in and have yourself a great day. Bye-bye.